Good morning, investors and corporates. Welcome to SET Digital Roadshow Third Quarter 2022 Performance Review. This session will run about 45 minutes, including Q&A. Company will start the session by 30 minutes presentation, followed by 15-minute Q&A. During Q&A, investors may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. May I now invite Star Petroleum Refining Public Company Limited to start the presentation.
ค่ะสวัสดีค่ะ Good morning everyone. My name is Juthatip, Assistant IR Manager, and I will be your meeting facilitator today. First of all, I would like to introduce SPRC management and SPRC team here. The first one is Mr. Robert Dobrik, our CEO ค่ะ
สวัสดีครับ
Next one is Mrs. Nusra Somkiat-Veera, our CFO ค่ะ
สวัสดีค่ะ
And next one is Mr. Sakshai Thamsurak, our Supply and Planning Manager ค่ะ
สวัสดีครับ
And then Miss Siri Sopa Phuangjan ค่ะ our Planning Analyst ค่ะ
สวัสดีค่ะ
ค่ะ Today's session will begin with a performance overview by Mr. Robert, then followed by me for the financial performance, and then market update by Kun Siri Sopa. And Kun Rob will go back again for the future opportunity and also wrap up before Q&A session. So now I will turn the session over to Kun Rob, our CEO, to start the session ค่ะ Kun Rob, please go ahead ค่ะ
Well, thank you. So look, we're going to provide a broad overview and then really leave quite a bit of time open for questions. So let me just start with just a high level overview of our operating performance. SPRC focuses very heavily on ensuring that we have safe operations at all times, that everyone goes home safely each and every day. And I'm proud to quote unquote reinforce our third quarter was as strong as our first and second quarters in terms of no significant incidents in terms of people and making sure that no day away from work cases. Actually, we go all the way back to 2013 once we've had our last day away from work case, almost 33 million man hours since our last day away from work case. To do that, we constantly challenge ourselves to make sure that we learn from each and every incident and each and every near miss so that we can make sure that we take appropriate actions to strengthen our safeguards. Moving over to just from an operational perspective, our operation availability third quarter was strong, 100% availability of our operating units. Utilization was slightly under full utilization, partly driven by some economic parameters. We don't necessarily run to maximize throughput per se. We run to maximize value. At any moment in time, we may be adjusting our product mix. We'll get into more of that discussion in a little bit, but we'll adjust the product mix and the crude slates that we bring in to optimize value. That said, we did have a facility that we did have the crude distillation unit that we had to slow down for a few days while we did some exchanger repairs. So that caused our utilization to be a bit lower than we could have been at full rates, but generally a pretty solid quarter nonetheless, except for that particular incident. Optimization, we're going to get into a deeper dive. Kun Pei is going to provide you a little more detail around our optimization, but like you said, we're constantly looking at different crudes to bring in. We've been fairly consistent in what we think has been the right recipe for the near term, but that's constantly being reviewed. We've brought in increasing amounts of atmospheric resid as a way to really top up and improve our margins, and we're constantly looking for ways to adjust our mix with regards to the ever-changing product values. So as you can appreciate through COVID, we would have really detuned things like jet. We're starting to see that market recover, and we'll get into more details. So we're starting to see that mix starting to increase, but looking for ways to grow other parts of our value chain as we'll get into a little discussion around things like asphalt. So, just a very high level overview. It was a pretty solid operating quarter. Financially, we'll get into that next, where we've seen some slight, obviously, reduction from a record, quote unquote, second quarter. But overarchingly, the things that we can control, being safe, being reliable, we've had a pretty solid quarter. And we'll move on to some more detail into two other parameters I discussed. So I'll turn it over to Kun Kip to provide us the financial update.
Thank you, Kun Rob. So this page will present you about our financial performance, starting from the gross refining margin, or GRM, on the top left graph. And we're going to start with the market GRM, which is in the light blue first. In the third quarter, the market GRM was at $6 per barrel. Even it significantly decreased from the previous quarter, but at $6 per barrel was not too bad compared with our history. The factor behind the decrease in the market GRM was a decline in the crack spread, underpinned by the recession fear, which impact the demand, and also the concern on the news of the China export volume that hurt the supply sentiment, particularly in the September. So the decline in the crude price in the third quarter has led us to have the total stock loss of around $13 per barrel, which consists of the stock loss of $8 per barrel and also the loss on NRV of around $5 per barrel. These stock loss have negatively impacted the accounting GRM and also our financial performance in the third quarter. However, I'd like to highlight that this was just the accounting loss, and it would be recovered when the crude price rebound to at the level around $90 or $95 per barrel. And for 9-month performance, it was quite good from the strong market GRM of $11 per barrel, together with some stock gain. The accounting GRM of 9 months came up at around $12 a barrel. So next, we're going to go down to the OPEX, or operational expense per barrel. As a result of our continual cost control and cost monitoring in the third quarter, our OPEX per barrel was at 1.8. And if we adjusted the throughput to be at our max capacity of 175K barrel per day, our OPEX per barrel would be just only 1.7. And this was the same level to the 9-month period. This quite competitive when compared with our peers, and we are ranked in the first quartile in the Solomon benchmark in terms of the non-operating cash cost. Then we're going to move up to the net income graph. In the third quarter, we have a net loss of $137 million because of the huge stock loss. If we exclude the stock loss, our earnings will be positive. And for the 9-month performance, our net income was at $229 million, which was quite high. Then the last graph in this page, the net interest-bearing debt per equity. You can notice that at the end of the quarter, our borrowing increased to be more than $200 million. And this was just the timing of the borrowing to facilitate our working capital during the rise in the crude inventory to support the higher crude run, as we forecast that the margin will be strong in the fourth quarter. And we also increased the inventory to support the increase in the strategic reserve. Apart of that, in the third quarter, we have paid the interim dividend and also the corporate income tax. These are the reasons why our borrowing increased when compared with the second quarter. But we are still competitive in terms of the ratio of IBD, interest-bearing debt per equity ratio, which was just only 0.2, and is probably the lowest debt level among the refineries in Thailand. So next, we're gonna recap about our financial highlights. The first one is the low OPEX. As I mentioned, we are able to maintain the low OPEX per barrel to be less than $2. And next is about the strong balance sheet. We have the strong debt position and also the good financial ratio. The last one is about the dividend. We maintain our competitiveness in the dividend payout, and we take the impact of the stock gain loss into the account for the dividend payment consideration, since the stock gain loss is not the real performance of the refinery. Next week, I'd like to turn the session to Kun Sirisopha to talk about the market. outlook and situation ค่ะ
ค่ะ thank you ค่ะพี่กิฟต์ Okay, so next one is market outlook. For global oil demand and supply are projected to be balanced at the end of the year 2022. Even though OPEC Plus started to see more surplus in supply side, as they just come up with the latest announcement to reduce the production down by 2 million barrels per day started in October, which they had to keep production in line with the slower pace of demand recovery. On the demand side, overall in 2022, demand increased majority from Asia and US region from more business and industrial activity recovery. So if we're looking ahead into 2023, demand is expected to grow up majority from Asia region and also intensifies from gas to oil switching, particularly in power plant business due to high oil price. So they want to move to due to the high gas price, so they want to move to oil section. Moreover, we foresee Chinese demand likely to increase from potential of relaxation of zero COVID policy in near term. However, overall global economy continue to face the concern over recession risk and also uncertainty situation which might impact to oil demand. So we move to the supply side. The watching point is EU tried to ban Russian oil import in early of December. So Russia need to reroute oil and refined product to other region instead of Western. In addition, expected OPEC Plus will continue to keep oil price at high level, while the member of the group continue to face production challenge as they might not able to increase their capacity at their target. So if we move to the right graph, I would like to talk about the global refined product inventory. Overall, global inventory of refined product are relatively at low level compared to average the past of 5 years. If you look at the middle graph on the right-hand side, inventory of middle distillate product like diesel and jet are at extremely low level. And at the end of the year, moving into winter season, seems like there will be more drawdown inventory to support winter demand, especially in Cairo. And we also see the same picture with Asia Pacific region, which I will show you in the next slide for Singapore inventory. However, the significant reason which supported of this low level of middle distillate came from strong pull of middle distillate barrel from Asia to the West, or what we call arbitrage. This is the main reason why the inventory is extremely low level. So for the light distillate stock, global inventory is at lower end level, particularly in US inventory. However, if we look at light distillate of Singapore inventory, this one are at the high level. Can you flip the next slide, please? So which majority came from naphtha product due to low petrochem demand, as naphtha is the one of petrochem feedstock. So if you see on fuel oil inventory in both Singapore and global inventory start to get back to quite normal level, as a lot of flow came from Russian oil, which supported fuel oil stay at the normal level compared to 5-year average. So overall, in the gross refining margin in Q3 was $6 per barrel, lower from Q2, as you see in the graph in the right-hand side, because of low refined product crack amid the high crude premium. Moreover, we continue to maximize diesel and optimize feedstock to maximize our margin. And next slide, please. Move to the crude oil price and refined product crack. Overall, Q3 margin was get impacted from lower refined product crack and higher crude premium. But if you see in the graph below, we started to see crude premium lower down in Q4 onward. And for Dubai price in Q3 was decreased from Q2 as our uncertainty economic situation which impacted to lower demand and overall refined product crack were dropped from Q2 because of the recession fears and volatility of demand. However, the middle distillate crack like diesel and jet are the key refined product which supported our margin. If we looking ahead in Q4 in the gray graph, here is show you the quarter to date from 1st October to 31st of October. The refining margin is expected to be driven by strong middle distillate market in the future, despite downward pressure from recession fears and slower economic growth. Moreover, downside risks are including additional export quota from China because at the end of September, China confirmed new export quota for transport fuel and fuel oil by issuing 15 million metric tons of export quota. So that's why if we look at gasoline crack at the first month of Q4, gasoline crack is decreased from this recent data that China launched, and also from winter low season that the crack down to about $4 per barrel. However, even more supply into the market, but expected margin will remain strong, largely driven by Europe import due to the ban of Russian oil. So move to next slide, please. Next slide, I would like to show you for the optimization. We continue seeing benefit from light crude processing, which are related to the crude that we import from Middle East. So in Q3, we imported 93% of Middle East crude. For product optimization, we continue to produce by direction to maximize diesel mode and optimize gasoline. This one is due to high demand, especially from power plant, which they have to shift from high gas price to diesel. This one was supported diesel demand increase. And in Q3, we produced diesel 39%, following by we try to optimize gasoline, and the gasoline production was reduced to 24% due to the lower gasoline crack that we just try to optimize gasoline. Moreover, we can produce higher jet production as higher aviation activity and strong jet crack supported us to increase jet portion to increase to 6% in Q3. And if you look at fuel oil in Q3, we have produced more fuel oil. This one came from we import atmospheric residue, which resulted high fuel oil yield, but due to competitive feedstock price, so atmospheric residue still good economic for us to import as feedstock. And for the right hand side, domestic portion, according to uncertainty circumstance like flooding in Thailand. So this one was hit our domestic demand. So we have to sell lower percent in domestic in Q3 to 90%. However, we continue to maintain high domestic sales to capture high margin. So that's all I have for market update. So I would like to pass to Kunlop for our next agenda. Thank you.
Thank you, Kupe. So look, yeah, stepping back, I think it's a solid quarter. Obviously not as strong as the second quarter, but the second quarter was arguably a bit of an anomaly in a long history of refining performance, but enabled us to strengthen our balance sheet and position us for, as we continue to move forward to be in a strong financial position. As we go forward, though, as we kind of look to the future, what are the types of investment opportunities we have going forward? In general, at this juncture, we're looking at quite a few what I'd characterize opportunities to continue to enhance our product mix to drive toward more valued products as we prepare for our 2025 shutdown. So just for those not aware, 2025 is our next major shutdown. We have a variety of projects at various stages of development that are targeting that window of opportunity to execute. So those are what I characterize as mostly refining optimization projects, generally looking for high payouts, quick payouts, high return, and not what I characterize as bigger bets at this junction. We've looked at a variety of things over time. We just didn't see the economics that we felt would be supportive of perhaps some of the longer term horizons that those projects needed to pay out. And really that kind of speaks to our general philosophy is to make sure that anything we invest in is yielding value to shareholders. And so we'll continue to look for opportunities to expand our value chain, to invest in future opportunities towards energy transition. I characterize a lot of those right now more at the study phase. We're looking at a variety of opportunities, whether it be biofuel, sustainable aviation, et cetera, et cetera. But near term, we're not seeing quite the level of economics that we need to make the bigger bet investments required. But continue to monitor. I think the opportunity the world's going to need pretty steady supply of fossil fuels and products for the coming decade and probably decades. And so we just need to continue to monitor the opportunities to invest at the right time to make sure that we maximize shareholder value. So I think that just really kind of hits on the high point there. If we can go to the next slide. So just as key takeaways, I think once again, a solid quarter. We continue to be safe, reliable, and efficient. And a lot of volatility still in the marketplace. As we think can be outlined, some of the noise from the China exports caused a fairly significant adjustment in cracks in September. But we can't control arguably those dynamics, so we continue to just do the things that we can do, and that's be reliable, efficient, and ready to take advantage of any margins as they present themselves. We continue to refine our mix towards diesel and optimizing gasoline where we can, and jet production likewise. So making sure we understand on any given moment where we can extract maximum value. Continue to minimize minimize fuel oil production, but not being shy as
WebEx Assistant is enabled to save audio highlights.
Not being afraid to bring in different product mix like atmospheric rigid, where we could top up and get some strong incremental margins on the total mix that we generate. So continue to look for ways to optimize our products. And we're constantly, we're never standing still. So we're, looking for ways to improve our cash flow, our cost controls, and I think as we alluded to, continue to keep our OPEX in focus, make sure that we remain competitive in those areas. We continue to benchmark ourselves to make sure that we are where we want to be in a variety of benchmarking parameters. And finally,
WebEx Assistant is enabled to save audio highlights.
Continue to look for opportunities to invest, but make sure we invest in the right timing. You can invest in anything, but can you get the returns you need over the longer term? And that's where we'll continue to be thoughtful around where we make investments, and we will continue to do so moving forward. So looking ahead, continue to do what we're doing and being safe and reliable and efficient. Look for ways to look for opportunities to grow value or save funds to increase our margins. Be a good partner to our communities. Be that reliable, safe partner that the communities are looking for, and once again, be thoughtful on when we invest to where we can get those what I characterize as the higher return and arguably over time lower carbon intensity opportunities. And we'll continue. We do have some opportunities that we're working on that front, taking advantage of local marketplace economics for things like solar panels, different things that we can do to offset some carbon intensity within our operation. We'll continue to look for ways to be managing our cash flow, loan repayments as appropriate, and hopefully maintain a strong set of dividends for all shareholders. Finally, we've been working steadily with the regulator around resuming our single point mooring operation, and those efforts are ongoing. And I'm confident we'll see some progress and success in the coming days and weeks as we move forward. So with that, I think we probably covered off on the high points. I think we're Kip, it's back to you.
So I think that's all for the session today ค่ะ คุณ Rob, you like to give the closing speech or something before we leave ค่ะ
No, just want to thank everyone for joining us today. Like I said, I think we've continued to be, hopefully you demonstrate quarter after quarter after quarter, just solid, generally boring performance in terms of just being reliable, efficient, effective at what we do. Our commitment is to continue to provide, dividends as a result of the earnings that we're able to generate. And, we're going to look forward to investing in a timely and thoughtful manner around opportunities as they present themselves. So look forward to connecting with you next quarter. And thank you for joining us.
Thank you very much ค่ะ ขอบคุณค่ะ
ขอบคุณครับ
ค่ะ
สวัสดีค
ข
รั
อบบ คุณค่ะ
สวัสดีค่ะ
ค่ะ